Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 155, published June 27th, 2025, titled Exciting Investment Ideas in New Company Rankings. So, this podcast is presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, please visit this podcast webpage for links to the articles and additional company and stock information. I have a great crop of 13 articles for you in this podcast. The first article I'm covering is titled Best Renewable Energy Stocks to Buy Before They Soar. It was found on industryleadersmagazine.com and is by Christy Gren. Here is some of what she says about her stock picks. 1. Next Era Energy, the titan of clean utility. Next Era Energy is the largest producer of wind and solar energy in the world. With its regulated utility, Florida Power and Light, and a massive renewable portfolio, is often viewed as the safest bet in clean energy. Its long track record of dividend growth and strong balance sheet make it ideal for long-term investors. A mix of regulated revenue and renewable expansion gives Next Era Energy both stability and upside, a rare combination in energy. 2. Brookfield Renewable Partners, global diversification at scale. With operations spanning North America, South America, Europe, and Asia, Brookfield provides broad access to hydro, wind, solar, and energy storage. As one of the largest pure-play renewable stocks to invest in, its long-term contracts and conservative financials make it a wealth-building machine. Geographic and technological diversification cushions against regulatory and market risk, offering solid growth and income. 3. Enphase Energy, dominating solar tech. Enphase isn't building solar panels, it's redefining how they work. Known for its cutting-edge microinverters and energy management systems, Enphase benefits directly from residential solar growth and rising energy storage adoption. Technology leaders in fast-growing niches often outperform. Enphase is a pure play on smarter, more efficient solar power. 4. First Solar, America's solar manufacturer. While many solar companies outsource manufacturing, First Solar produces its panels in the US, making it a key beneficiary of domestic subsidies and reshoring trends. Its cadmium telluride technology offers cost and performance advantages over traditional silicon-based panels. Vertical integration and domestic production give First Solar a geopolitical edge in a competitive global market. 5. Plug Power, hydrogen's bold bet. Plug Power is a leader in hydrogen fuel cell technology for vehicles, industry, and power generation. Though not yet profitable, its partnerships with Amazon, Walmart, and global logistics players show real market traction. High risk, high reward plays like Plug Power can deliver outsized returns if you're patient and can handle volatility. 6. Tesla, more than just EVs. While known for electric cars, Tesla's energy division is growing fast. Its solar roofs, Powerwall batteries, and massive grid-scale storage projects position it as a holistic clean energy provider, not just a car company. Disruption comes from companies that integrate hardware, software, and infrastructure. Tesla's renewable arm could be its next trillion-dollar story. 7. Clearway Energy, clean power, reliable dividends. Clearway owns a mix of solar and wind farms across the U.S., with long-term contracts that ensure predictable income. Its focus on dividend-paying renewable assets makes it ideal for conservative investors looking for income and impact. Not every green investment has to be high growth. Clearway offers stability and passive income in a volatile market. 8. Albemarle Corporation, powering the battery boom. Albemarle is a leading lithium producer, supplying the battery materials that power electric vehicles and grid storage. As the backbone of clean tech, lithium demand is projected to surge in the coming decades. Sometimes the best renewable energy stocks for growth aren't utility companies, they're the suppliers fueling the ecosystem. End quotes. My second article continues the renewable energy theme. It's titled, Looking to Gamble on Hard-Hit Solar Stocks? ? This is the top-rated ticker now. The story was found on finance.yahoo.com and is by Pathakrit Bose. Here's some of his thoughts about his stock pick. If President Donald Trump's big beautiful bill passes, it would not be so beautiful for companies in the solar industry. This reality was evident in the meltdown that solar stocks witnessed on news that the Senate version of the bill looks to fully phase out both solar and wind power tax incentives by 2028. So, where does that leave First Solar, whose shares have corrected by nearly 18% already this year? In a pretty good place, if analysts are to be believed. First Solar specializes in large-scale utility solar projects and integrated photovoltaic systems. The company designs, manufactures, and sells CDTE thin-film photovoltaic modules and is the only major solar manufacturer headquartered and producing in the U.S. Its market cap currently stands at $15.4 billion, making it one of the largest companies in the industry. Now, there are some valid reasons for First Solar stock's decline with the big, beautiful bill. With such legislation pending, investors fear that developers may cancel or delay new solar installations, shrinking First Solar's total addressable market. Consequently, this may hurt project bookings and revenue visibility for First Solar. However, I reckon First Solar's correction has been overdone, and projections about its downturn extending further are misplaced. Why? Let's have a closer look. First Solar has had a tough time in recent quarters as its earnings have missed estimates, with the latest quarter even seeing the company's earnings witness a yearly decline. However, its net sales did surpass the street estimates and rose on an annual basis, accompanied by a decrease in short-term debt. Management remains confident about the company's long-term prospects based on its Made in USA strategy, with CEO Mark Widmar commenting, "Despite the near-term challenges presented by the new tariff regime, we believe that the long-term outlook for solar demand, particularly in our core U.S. market, remains strong, and that First Solar remains well positioned to serve this demand. This belief is based on the unique profile of First Solar compared to its peers as America's largest and most established solar module manufacturer and the country's only vertically fully integrated producer, our significant network of domestic supply chain vendors, and our proprietary CAD-TEL-based semiconductor. First Solar appears poised to win the battle for solar industry dominance for a few reasons. First is its unique CDTE thin film solar technology, which gives the company a distinct advantage by insulating its supply chain from the risks associated with China-dependent crystalline silicon. With roughly 95% of solar modules globally based on crystalline silicon, First Solar stands out as the only large-scale solar manufacturer with international reach using cadmium telluride technology. Another key strength is its strong domestic manufacturing base. The surge in artificial intelligence-driven infrastructure further plays to First Solar's strengths. First Solar's product line, especially its utility-scale thin film modules, is particularly suited to meet the reliability and performance requirements of this growing segment. Analysts remain bullish on First Solar stock, assigning it a rating of strong buy with a mean target price of $211.81. This denotes upside potential of about 45.5% from current levels. Out of 31 analysts covering the stock, 25 have a strong buy rating, 2 have a moderate buy rating, 3 have a hold rating, and only 1 has a strong sell rating." End quotes. Now, this next article is a great ranking of companies. It's titled World's Most Sustainable Companies of 2025 and found on time.com. The introduction is by Time staff. Here are some brief quotes from the article. Statista and Time have joined forces to identify the world's most sustainable companies of 2025, aiming to highlight corporate responsibility and promote sustainable practices. The ranking process began with a comprehensive selection from over 5,000 of the world's largest and most influential companies, considering factors such as revenue, market capitalization, and public prominence. The first step excluded companies involved in non-sustainable industries like fossil fuels or deforestation. Additionally, companies appearing on negative lists related to sustainability issues, such as those identified as carbon majors or associated with environmental catastrophes, were automatically disqualified. The second step involved assessing companies based on external sustainability ratings and commitments from reputable organizations. Key criteria included CDP ratings, adherence to the UN Global Compact, alignment with the Science Based Targets Initiative, near-term and long-term, inclusion in the S&P Global Sustainability Yearbook, participation in the UNFCCC Race to Zero campaign, and MSCI ESG and SRI evaluations. The final step involved researching various environmental and social key performance indicators from companies' corporate social responsibility CSR reports. And go to the site of this and the link to this page. Go to the page and see the full list of companies right here. End quotes. Note, the top 5 companies in the ranking are Schneider Electric, France, Telefonica, Spain, Brambles, Australia, Temenos, Switzerland, and Moncler, Italy. Interestingly, none of these top companies are from the US. My final article is titled, "These 50 Canadian corporations are carving out a more sustainable future." It's found on corporatenights.com, and the introduction is by Rick Spence. Though this will mainly interest Canadians, many companies cited might interest ethical and sustainable investors globally. Here's some of what Mr. Spence says in his piece. The Best 50 ranking was first developed back in 2002 to track the sustainability journeys of Canada's most environmentally and socially conscious companies. This year's list, that Corporate Canada's Ethical Vanguards is not only actively reducing its carbon footprint, but finding new and creative ways to connect with their customers, create fairer workplaces, and develop more prosperous and resilient communities. Yes, greenwashing and window dressing still dominate the business landscape, but rankings like the Best 50 prove that progress is possible. Even the best companies have flaws, but on the whole, this list demonstrates that many Canadian firms are preparing themselves for increasing change and creating value by prioritizing transparency, innovation, and action. End quotes. Note, the top 5 companies in the ranking are Boralex Inc., Stantec Inc., Innergex Renewable Energy, the Cooperators, and the Royal Canadian Mint, government-owned. The Cooperators actually is private, the others are all public companies. Now, more articles of interest from around the world for ethical and sustainable investors. 1. Title: A comparative look at the costs of faith-based ETFs on etftrends.com by Ellie Carusa Fitzgerald. 2. Title: Canada Sustainable Funds 2024 Review on Morningstar.com. 3. Title: Best Halal Mutual Funds in India 2025 list on TradersUnion.com by Alameen Morshed. 4. Title: Just ESG ETF doing the job, but not the best on SeekingAlpha.com by Fred Piard. 5. Title: Goldman Sachs launches Green Bonds ETF for emerging markets on CarbonCredits.com by Aidan Green. 6. Title: Octopus Energy launches first African Renewable Energy Fund on MSN.com by Global Data. 7. Title: Top 10 Solar Energy Companies on energydigital.com by Jasmine Jessen. 8. Title: Top Halal Stocks to Invest in Bangladesh 2025 on tradersunion.com by Alamin M. 9. Title: Examining the top 5 UK ESG investment funds on sustainabletimes.co.uk by Georgina Thomas. So these are my top news and stories and with their stock and fund tips for this podcast. Exciting investment ideas in new company rankings. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring this podcast to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on July 11th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.